Rob, a bit of a pullback on the markets today, but we have had a strong start to 2010. Is reality, do you think, returning to these markets?
I think so. I think that the commodity side especially has had a very good run in the beginning few weeks of January, and I think profit taking came in after those Alcoa numbers slightly disappointed, and I think some profit taking coming in, especially on the commodity side.
So is that all you see it as, profit taking, not perhaps a correction starting to take place in these markets?
I think it's just profit taking at the moment. We'll need to see some more numbers come out and more earnings come out to see if it's going to be a really big pullback. At the moment, I just think a little bit of caution, a little bit of profit taking coming off the table at the moment.
Of course, you mentioned Alcoa kicking off the US earnings season yesterday. Numbers missing targets on the earnings side, but beating targets on the revenue side. And revenue was one of the key focuses in the previous reporting season, wasn't it?
Well, obviously, you're looking at revenue as the recession starts to end. You see that revenue start to pick up slightly. So you're looking at that top line. But later on, you want to really see that bottom line earnings come through, which is the profits. And the profits were, I think, 1 cent per share, and they're expecting about 6 cents per share. So not quite as good. So that fundamental and the deep value is what we're really looking for now. The markets have appreciated substantially over 09, and now we need to see real value come through to the market. So I think in this earnings season, we're going to be looking a lot at the bottom line earnings as well.
Now, of course, Alcoa is a big mining play, and we're seeing our resources stocks particularly under pressure today. Anglo's, BHP, Billiton, Sasol, all falling back. Do you think this is related to those Alcoa earnings?
Definitely, I think so. I think that people are expecting the mining companies to do well and expecting to have really good profits, similar to like the banking profits that were made last year. And Alcoa came out now and just showed that it's not as easy to make that much money. So I think we're going to have to wait and see what the other big miners come out and see, and are they making profits, and is the amount of imports that China is bringing through filtering through to these miners.
But perhaps to juxtapose that with the trade figures that we saw out of China yesterday morning, 17% rise in exports, but a 53% rise in imports. So really demand still coming through from China, and particularly for commodities, I should imagine.
Definitely, I think that's why we've just seen a slight pullback today and maybe over the next few days as profit taking comes in and not really a correction. And those numbers from China with increase of 53% in imports is definitely holding the market up, and people are expecting that commodities will continue through the next 6 months like that through China. So just a slight pullback on profit taking.
Now, following Alcoa's results last night, are we expecting a deluge of results to start hitting the US markets?
We're going to have to wait and see. I think that on the banking side, we've already seen that the numbers have been quite good. But on the big commodity side and the big miners like Anglo, Billiton, one or two of the big, like Vale itself, we're going to have to wait to see if those numbers filter through. We're going to have to see really good earnings come through and deep value showing cost cutting finished. We want to see unemployment coming down as well, so no more job cuts as well from those companies, and is there going to be growth going forward? So it's going to be quite an important next few weeks in the American earnings season. Of
course, you mentioned the big ramp up we've had in equity prices over the course of 2009 and continuing into 2010. So I should imagine that we'll really need to justify those valuations with the earnings that are starting to come through.
Yes, obviously on a fundamental level, we're starting to see some good numbers come out of the States. Manufacturing has improved 2 months in a row, and manufacturing in China has improved, and we need to continually see those manufacturing figures, PPI, and unemployment coming down. And as those come down, we should start to see a long-term growth prospects improving. Whereas in 09, we saw a lot of it just short-term, lots of cost cutting and revenue increases, but underlying profit not as good as expected. So we need to see the underlying fundamentals keep coming through for the next 6 months to keep those valuations in the market where they are currently.
Well, perhaps just taking a look at a bit of yesterday's activity, we had SAB Miller down close to 2%, while the industrial index was down about 1%. And of course, that news coming through that Heineken had won the battle for FEMSA, the Mexican brewer. Do you think the market could be a bit disappointed that SAB Miller didn't buy FEMSA?
I think so. I think that Heineken paid 7.6 billion for them, and SA Breweries had valued them at about 7 billion, so they didn't pay up. So on some levels, shareholders will be happy that SAB didn't pay up that extra $600 million. But on the Heineken side, I think very positive for them. They've got a foothold now in Mexico, which gives them also a foothold into the USA, where they're battling with some of their products. On SA Breweries side, they're already in South America, not in Mexico at the moment, so it would have been a nice foothold for them. But they do have 1 or 2 problems in FEMSA in the Brazilian market, and I don't think that SA Brewery wanted to take those negative earnings on.
Well, you're talking a bit about the US data that's coming through and starting to turn positive. And we've had some house price data out showing that we have picked up towards the end of last year, in December in particular. We're also getting manufacturing production data out at 1 p.m. Do you think this is going to illustrate that the recovery is intact in South Africa, Rob?
Well, we hope so. The manufacturing data in South Africa has also improved as it has in the US, and we need it to improve on a monthly basis. If we have one pullback in the market, if we have a month of negative production, it's a big problem on unemployment. We've already lost about 1 million jobs in South Africa, so we need those those manufacturing numbers to keep improving so we can still employ more of those unemployed people. And of course, important number coming back a little bit later.
And of course, we do have an interest rate meeting coming up in the next week or two. Do you think the manufacturing data could tip the balance in favour of a rate cut if it comes out worse than expected?
I think if it's a bad number from the manufacturing sector, there is a chance that interest rates can come down one more time. I think the estimates at the moment is about 60% chance that we won't have a cut, and about a 40% chance that we will, and it could be tipped by very poor manufacturing numbers.